Good
morning.
afternoon. This is Mr. Not Advice. It is Wednesday, July 15th, 2026. As always, this is for entertainment and education purposes only. This is my end of the day update. All right. So we had continued to be the rotation from memory stocks into mega caps continued today. Apple, CoreWeave, and SpaceX were all potential catalysts, a couple of them positive, a couple negative, leaving really the broad equity markets are pretty much range bound today. But the Nasdaq was rescued by a zero DTE put covering, which I'll go over here very shortly. Rate hike odds, yields, and the dollar all fell today, and Bitcoin was bid while gold did absolutely nothing. Bonds continue to perform relatively well, with Warsh giving his second day of testimony on the Hill. He really didn't say anything that was incredibly meaningful, and we had rate hike odds again tumbled after PPI, Producer Price Index, confirms CPI's coolness as energy deflation drags down headline inflation and core price gains continue to slow. Today's PPI print effectively took a July hike off the table, but leaves September in play. Although I think that's going to continue to come down. Warsh's couple of comments that he made that I think are important. He's been a really pretty hawkish up on the Hill, meaning that he spent most of the time talking about inflation, and yet today we finally got out of him a comment about the current status of the labor market. Warsh said inflation part of our mandate and looks less good, while the labor market part of the mandate looks pretty good. Earlier today, the New York Federal Reserve Board, John Williams, said that even though inflation remains high, there are encouraging reasons to expect that it has peaked. So, with that, as you can see, we see the July and September rate hike odds. We saw a weakening across all durations in the debt market, with yields dropping from the 2 year to the 30-year bond indexes. All good, obviously, as a direct result of the headline news today out of PPI. Further comments, markets appear back the implied probability rate hike at the next FOMC meeting, and yields continue to be modestly lower across the board. Oil, the rhetoric continues with regional attacks overnight, but there still has not been any confirmed strike on any major energy infrastructure, either by the US or by Iran. So, DoD data showed that record US crude production and a drop in product exports, as well as a slowing of SPR releases, Strategic Petroleum Reserve, have eased fears, pushing WTI crude prices back below that $80 level here, closing at 79.18. WTI did get a little bit of a late lift as Trump jawbone said that strikes will continue next week after Iran said there were no plans for talks. I guess that the beatings will continue until morale improves. Gasoline and heating oil have not hit new post conflict highs, and I think the focus is going to turn to the distilled products, not just the oil itself. However, this is no longer a Middle East story because Russian refining capacity continues to tighten as Ukraine is taking out key refining ability in Russia. This continues to point to continued stress within the refining part or the refining structure of the global oil markets. Bloomberg Michael Ball notes with Russian exports limited, even full out refinery runs are unlikely to rebuild inventories fast enough to loosen the tightness in key markets. Goldman said this morning that the latest closure of the strait leaves the market short of about 13.4 million barrels per day of crude, which the only way to fix that is going to be demand destruction or renewed inventory draws to balance the market. Today was a range-bound session for the S&P 500, one of the lowest ranges of the day. Very, very quiet day. Goldman's desk said today that it was incredibly quiet volumes, down 11% volume versus the 10-day moving average of volume, with their floor, Goldman's desk, tilting 5.5% better for sale, with hedge funds as large net sellers and long only slightly only better to buy. Hedge funds were 15% better for sale. Supply, they were selling tech and communication services. While there was demand in healthcare and financials, although it was quite muted, long onlys were slightly, as I said, better to buy, with net buys in tech and communication services. and selling and consumer discretionary and healthcare. Sometimes it just seems like well, I think they just sell to one another, obviously. Afternoon saved the by the dip ramp, put a lot of lipstick on otherwise sort of an uglier day today, but that was due to zero DTE, significantly zero TTE positive delta flow. So they were buying calls or they were covering puts or selling puts. Investors continue to rotate out of semiconductors and into mega cap tech, but that's primarily due to the fact that semiconductors are a very crowded trade at this point. Taking a look at this is mega cap green, mega cap tech is what's capturing the money, and memory it continues to get hit down, as we see in Marvel and Micron and ASML and all of those. Check writers versus check receivers divergence continues to narrow. And we've been talking about this for weeks. The Mag 7, oddly enough, today was the safe haven with the S&P 493 actually down 0.56% today. The Mag 7 also massively outperformed the NASDAQ today and with its second best relative day in the past 5 years. The Mag 7 NASDAQ pair crossed back above the 50-day moving average. And why those matter is they are technical levels that could trigger algorithmic buying. Gold managed very modest gains on the day, notably less than expected, but that's due to the weakness in the dollar. But it was choppy trading today, with Bitcoin also jumping to 65,500 intraday, but slipped back in the afternoon. So it is back near pre-Warsh FOMC highs. Finally, looking at the overall market situation, we have very low, very narrow breadth. We have low volumes. The market right now is in a positive gamma situation. So rallies and dips are being bought, not extended. And with option expiration this week, we had one of my members told me that max pain on the S&P was at that 745 to 750 level. And that's consistent with what I'm reading here from Goldman Sachs too. So after hours today, we had some news out of EOSE where they were chosen, mentioned by Trump actually, as a supplier of energy storage tech to the future Golden Dome project, which is the massive missile defense project, I guess the grandson of Ron Reagan's Star Wars project. Here's why this is so important to me. One of the reasons, well, the only reason I got involved with EOS was because of Cerberus, right? They announced, and that very next day, Mr. Greg Rees and I did a podcast where we said we were getting along. To now starting to see some of these deals that are happening, you have to ask yourself, would these opportunities not only be open to EOS, but also would they be able to actually capitalize them if not for Cerberus? You all know what my feeling is towards Joe, which is that he effectively won the lottery when Cerberus came in because all he had been good at was destroying shareholder value. This deal with the DOD has obviously the fingerprints of the connections to the Trump White House, with one of the members or the founder of Cerberus being part of the DOD. So I am very excited about it. I don't know what the total size of the contract is on a go forward basis, but here's what's important. To me, it's changing the narrative again. We've had 6 to 7 months where all the investment community has talked about is how badly EOS struggled in December and February of last year. The latest announcements coming out of Frontier Power, announcement today on the DOD, are the direct results, in my opinion, of Cerberus involvement and management execution or expertise as it relates to EOS. I think this is only just a beginning of what's to come. And it's slowly starting to chip away or starting to turn the ship, the narrative ship, to not looking backwards to how much they have fucked up in the past, but now looking towards future possibilities. And if you want a stock price to move up, that's what you need investors to be focused on, the future and what the potential is. Really hard to do that when a company stumbles. And that's why we've gone through this long period of EOS not being able to get its legs. Do I think this is the bottom? I don't know. Price will tell me that. But I do see that what's exciting to me is we finally are starting to see some of the fruits of the relationships that Cerberus brings to the table. And that in itself is starting to change this narrative. It was a welcome surprise to get that news announcement. And on that news, EOS flew over $5, now settled after hours at 487, 489. Certainly the mark, it could give that up. But I want to make a note today that even with the overall market weakness, EOS came very close to closing above the level that I needed to in order to take a trade. Unfortunately, it didn't happen. This was my candle low, and I get 2 days to close above it. If this price holds into the open tomorrow, we are going to gap. That's obviously concerning me because we like to fill gas before we go up. So, no, I don't think that this in and of itself is going to be launching EOS to the stratosphere. I think what we're seeing is a pickup in the momentum and the cadence of news announcements and the realization of economic opportunities for EOS, where they're starting finally to book some of these potential deals or potential opportunities. In addition, we had the pre-release of numbers this morning for EOS for second quarter, and given a headline estimation for revenues, 300 million in 2026 annualized revenues are very much achievable for the rest of the year. This now is becoming more and more an execution story, a scaling story. And my hope is that there will be a third news announcement by EOS that maybe we get a large order, but they continue this cadence of good, positive news to turn the ship, to turn the narrative and the perception of the company. So it's no longer looking back at all the screw ups they did, but looking forward to the potential of what could be. So I think it's great news. I don't think this is the news that finally launches the stock. I think we're going to need to see some of these orders, larger orders realized. But at the end of the day, if you look over the last 3 weeks, that what's occurred with the EOS in terms of news, it's been fantastic. It's been positive. So my hope is that we continue that news. We can start building some narrative momentum to the top side, and people and investors' focus will rarely turn and focus on the future potential of EOS, because that's where any investment, that's where you want it to be. So what do I do now? I have to wait till tomorrow to see what the price action is. There probably will be a gap. We closed at 437 and it's indicating at 485. Very well could sell off because there still is the stink of December 2025 and February of 2026 on EOS. And it's going to take more than these incremental news announcements that each and of themselves hold great potential for the future. But it's going to take more of that to finally convince the investment community that follows EOS that that was a one-off, that was a mistake, and now we can focus on the future opportunity. So hope you had a great day, and I will look forward to talking with you tomorrow.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different.